are you doing? This is Rob Reinhold. I'm joined by Darren Fisher. It's the trading room, and here we are. It is options expiration week for the monthlies. So definitely always a busy week for us here at Maverick. But let's jump into it, and let's first start off with a recap of last week. What happened last week? And we had a lot of kind of crazy things happen. So first off, let's talk some politics. We had Boris Johnson step down from being the prime minister on Thursday, and he was pressured by his own party to do so. Now, when he stepped down, the UK stock market spiked and the pound strengthened. And I thought to myself, that is adding insult on top of injury. How bad would you feel if when you quit your job, the stock market was excited for it? I mean, Darren, what's your thought about, can you imagine being in power? You finally step down and everyone is happy and everything goes crazy?
Oh yeah. You feel like the world's biggest loser at that point, that people are cheering your demise, and it's having a positive effect on the markets. It was really, his administration was just a series of unforced errors that he didn't need to do. But I'm really surprised that he won election. He had a 5-year term locked in because his party won the election in Great Britain. That he screwed it up as hard as he did, as fast as he did, just baffles me, honestly.
Yeah. Let's take a look at these economic reports we had last week. Lots of job openings. There's still lots of job openings. And we got the Fed minutes, and the Fed is hawkish. Now, look, we already knew that. The Fed minutes just showed how hawkish the Fed is. And then we got our payrolls report on Friday, and the number was much, much better than expected. 372,000 jobs created. I saw 250 to 260 estimates for it. That's a big beat. And the market really didn't like this number. The market actually went down at first. The futures did. And we opened up Friday on a down note. The market did claw its way back. But this was not the number people were hoping for. And I think what's happening is that people are hoping that the Fed is going to back off, saying, hey, we see some possible slowing in the economy. Let's let the Fed back off. This number basically said the Fed probably can't back off anytime soon. So let's take a look at what the markets actually did for the week. So the markets had an okay week. We had the Dow up just under 1%, S&P up 2%. The Qs had the biggest jump, 4.5%, really led by semiconductors. And we had the Russell pulled up by 2.5%. So look, let's look at the charts here, and let's talk about how to not get too excited about this, because if you take a look at this chart here, we had good days here. Look at the candles. We have 6 solid green candles on the way up. It's a great thing about, if you're bullish, you're saying, okay, this is great. Here's the problem. When you take a look at the whole picture, we are running into a really critical area of resistance here at 390 to 392 on the SPY. And if we can get through that range, the next thing we have is the 50-period moving average that's going to be on top of us as well. So I think if you want to try to get bullish here, I don't think you can, because there is so much work that still needs to be done. And this market has proven many times over the past 6 months that it doesn't have what it takes to turn around and really be bullish. So I'm looking at this market saying, yes, we've put in a very significant low. Yes, the price action is much better than it was, but you can't be bullish in any way, shape, or form. And if you take a look at what's happening with the commodities market, and this is something that Darren and I were chatting about earlier, the commodities market is coming apart. We have commodities that are down 30, 40% from their highs. We had oil and gold tumble again. Oil tumbled 10% last week, 3% this week. Gold tumbled 4% last week, 3% this week. Silver is down like 40% off of its high. We are seeing this sign from the commodity market that's saying, hey, things are really slowing down. However, we're getting other numbers that show that it's not that bad. If we take a look at the Qs are doing the same thing. Now, they're a little bit stronger. You see it a little bit further off the bottom, but we still are right there at a 50-day moving average. Right here at around the 300 to 305 is going to be some resistance. And you just can't get excited. It's too early to call for a bull market. It's too early to call anything. And I think if you do, I think you're setting yourself up for a lot of disappointment when this market doesn't follow through. Now, that being said, this market is showing that it's strong right now and it doesn't want to go down. I don't think we turn down either. So if I don't think we're going to have the strength to break higher and I don't think we're going to turn down, then my only call is I think we chop around here. What do you think, Darren?
Yeah, I think we've got a couple of weeks to digest the future. I think is the best way to put it. We need a couple of weeks to see what the future's going to bring. I know you did a class, excellent class on how summer trading has changed over the past 20 years. But I think this is going to harken back to 20 years ago and before, where we just meander. It's choppy, it's ugly, and it's how can the market cause the most pain to the most people? It's going to disappoint the bulls when it fails. It's going to disappoint the bears when it fails to break down. And we're just in this area between 270 and 300 on the Qs. And that's what it's going to be until Labor Day, I think is what this market is showing us it wants to do.
Absolutely true. And if you take a look at the VIX has just been coming down slowly, and it definitely is echoing with everything that you said, that just people are becoming more complacent. And I shouldn't say complacent, because usually we use that term complacent when people are very bullish. I'm going to use the term apathetic. People are very apathetic right now to investing in stocks, and most people don't have the appetite for it. And so what we're seeing is this intensity that we've seen over the last couple months. It's just bleeding away. Everything's bleeding away. So I'm with you, Darren. I think we chop around. I could easily see us going nowhere all the way through Labor Day. So let's talk about this week. You already have our viewpoint of where we think this week is going to go, and we don't think it's going to go anywhere. We think it's going to be a choppy week. Are we basing? Are we pulling back? What are we going to do? I don't think there's going to be a definitive answer to that. I think we're just going to get chop. So on the schedule, we do have a couple things that are notable. Wednesday, we've got the CPI report coming out. That's going to be a big one. This is going to really determine when we hear from the Fed in 2 weeks, are they going 50 or 75? And if this number's hot, it's 75. If this number's cool, it's probably a 50. So I think with a high inflation number, I think it spooks the market, and you might get a little bit of a sell-off off the CPI. If it's lower than expected, I think that it's a little bit of a relief, and I think the market can rally a little bit, but I don't think we're going anywhere because nothing has really changed, even though the CPI might be off 0.1 or 0.2. We have retail sales on Friday. Those have been unimportant to the market, so I think you can just ignore everything except for the CPI on Wednesday. So when we take a look at the market where we are, we have to upgrade it. We have been at a -3 ever since we've been below the moving averages. Now we are above the 20-day moving average. We're still below the 50. The slope is still lower, but we have to go from a -3 to a -1. So look, it's gone from a horrible market to just a bad market. That's where we are right now. If the market can show that it wants to go higher, we will upgrade to a 0 and then a +1, but it is way too early for anyone to be more than neutral on this market. So let's take a look at the sectors and how they're going.
Yeah, so you can see by the performance last week, consumer did good, technology did good too. Those both rebounded. But if you take a look at the chart, they just made up their losses from the previous week. So we're not, we're clawing back. It's one of those times when you almost fall out of a window, but you grab yourself and pull yourself back in. I mean, that's where you're looking at. Communication services still looks, bad, but it had 3.5 gains. The really surprising thing for me is how volatile utilities have been. This is, in 20 years of doing this, this is the most volatile that I've seen utilities. You see those massive move down, a massive move up, and you would think that utilities would be more sedate. They're not. I don't think I've ever seen a time when something that is supposed to be paying a dividend, is a store of value, can have this type of a move, either way. I mean, and it's going both ways as well. So, I mean, you can see utilities up here. I'm at a 0 in utilities. I mean, we're sitting right there. You go back a couple of months right there. We're kind of at resistance right now, what was previous support was broken, and that's going to kind of become resistance. So I think we bug along here until that 50-period moving average can catch up. Then utilities might have an opportunity to begin making some gains, but a very, very weird showing for this entire sector. Move on to communication services. We've been banging away -2, -2, -3 on communication services for months here. I actually had to upgrade comm services to -1 right now. So it's firmly above the 20. It's put in a couple of good days. It's still below the 50, and it's stuck between those two moving averages. So there's a lot of good shorts out there. The whole sector's been beaten down so much. I just don't think there's a whole lot left to sell in communication services. So I think you're going to start seeing some value buying in comm services, which could very well turn into a value trap. Research that if you need to. But this is one of those ones where there's so many beaten down. A couple of big investors are probably going to go in there and try to start cherry picking the ones that have held in. So I'm not as bearish on comm services as I have been for the last while. Moving on to real estate. This is another one where it's made some. I'm at a 0. This looks about like it's we're at that 42 level is now resistance. What was previous support? I think we hang out here between the 40 and the 42 level. For the foreseeable future right now, at least the next couple of weeks. And we're going to base here. It looks like I don't think we're going to get any more of those massive moves to the downside that we saw for a while yet. I think we've got to build up some energy. I think we need on a fundamental picture, we need to see what the commercial space is going to do in the next 6 months. Once we get some more clarity on that, then I think we make a move to the upside or the downside, depending on what the outlook is. So industrials next, -1 on industrials. It's barely at that 20-period moving average. It's not come off the bottom as fast as a lot of other things have. Friday's candle, where a lot of those were green, this one was red. So I think there's going to be some weakness right here. It would not take a whole lot for me to go from a -1 to a -2, but I think with the market center right now, we're just looking at it, slightly to the downside on industrials. Moving on to healthcare. Healthcare to me looks to be the best sector out there. I'm at a +1 on healthcare right now. We're above the 20. We're above the 50. The slope of both of those needs to turn up, and it's going to take another couple of weeks to do that before I'm going to get more bullish on that. And we've got some resistance up there at the 134 level. So I think we're slightly to the upside over the next couple of weeks. So healthcare is looking pretty good. A lot of, take a look at the individual company sectors before you decide what you want to pick. But I think we've got some upside in that right now. Financials, -1 on financials. This is another one. This looks a lot like industrials to me. I think we slightly down. We might base between that 31 and 32 level, maybe hit up to 33. I just don't think we have the guts to get up there. So I think in the near term we're going to be downside to the -1 just slightly. I'm not expecting massive moves on that. I'm not expecting massive moves over the next 2 weeks on anything really. So this one just it's the stinky gym socks. You say, oh, there's a funk in the air. What is it? I can't really tell what it is. That's kind of what the financial sector looks like to me. Consumer, despite having a massive move to the upside, I'm at a 0 on this right now. I mean, we could go up to that 150 level is a possibility. That's right about where the 50-period moving average is. It did surprise me this week. Consumer did. But really, you take a look at it, it just regained what it lost the previous week. So I think we're at that point where it's very difficult to make a case to get very bullish on anything right here. And this is one of those ones that even though you may make a 4.5% move, there's not a whole lot of appetite to extend yourself on that. So I think this is going to be another choppy one here that just goes sideways for the most part. Tech is looking the same to me. It's stuck between those moving averages. It made a whopping 0.05% move to the upside, gap down and clawed its way back. So basically where it closed on Thursday. Again, you've got some considerable resistance there. You've got the 134 level. The 50-period moving average is 135. Maybe a little bit more upside, but I think it's just going to be sideways and choppy for the next few weeks in this one. Materials is not looking good. This is probably the lowest rated sector that we've had. I'm in a -2 on materials right here. I just don't see any upside. There's no reason to be going long a lot of these material sectors. As you said, Rob, a lot of the commodities have come down 30, 40%. They just aren't seeing the demand from the industrial sector to make it worthwhile to expand their operations. So I think the two sectors to look at for where the economy goes is industrials and materials. Take a look at those in tandem. That's going to tell you what the outlook is going forward. So I'm in a -2 on materials right here. Energy was at a 0 for the past couple of weeks. I'm still at a 0 right now. I mean, you could make me the case that, hey, we're going to be heading down, but I really, it just feels like we want to base here about that 70 level. And we might, this is a pretty volatile sector right now. I would say between 70 and 75 is going to be the band where we just base for the next couple of weeks and then decide what's going on. I mean, yeah, oil's now at, I think 101. It was down 3%, but that's still $100 oil. I mean, what you're seeing, and you and I were talking about this before, can you have monetary inflation, so a lessening of the value of the dollar, along with demand destruction? I think that, personally, I think that's the situation that we're in. I'm going to give it a couple more weeks to flesh out and get a little bit more economic data before I firmly commit to that. But that's what it feels like right now. We're in this dual weird place of rising inflation, decreasing demand, and the value is getting less. I mean, you've got higher input costs, supply chain disruptions. I mean, this is going through, all the commodity sector, food especially right there. We have yet to see a lot of things come out in rents. So that's where I think we are. And you can see, here's what the sectors look like. Pretty decent shift from last week. Materials down there at the -2, financials, comm services, industrials at a -1. Got 5 sectors: real estate, utilities, consumer, energy, and tech, all at a 0, which I want nothing to do with any of them either which way. And then healthcare is the best looking one at a +1. So let's take a look at some possible trades that we're going to be looking at this next week. So in last week, we had one in the utility sector. It was NEE. We were long that. That really went nowhere. It was down 0.38%. So that's a lot of these picks. It's just kind of a meh week. What we had. So but this time in the real estate sector, we are taking a look at Hudson Pacific Properties, HPP. Now you can see this one's been going down. You can call it the March of Death. We're in a nice low base right here. Everything is trending down. It looks like we're about to break that support there at the 1470 level right there. So this is looking good to the downside. If you want to wait for confirmation, I would recommend that. But what I'm looking at is going to go long those August 19th. So I'm looking out, 5 weeks here, those 1750 puts. I'm going to short this Friday's 15 against it. So as long as it just hangs out at that 15 level, basis goes a little bit lower, then I'm fine. And then I'm going to take a look at those 1750 puts and see what I want to do with them. Probably going to sell something against them as well. Maybe go down to the 1250s for August, turn it into a vertical spread. This is definitely looking pretty bearish right now in the real estate sector. And in communication services, last week we were short Spotify. And this is one trade that just didn't work out for us. The Spotify was up 6.89%. So, you win some, you lose some. This week what we're looking at is we've got Meta, which is essentially Facebook. They're in a bear rally, kind of range bound right now. So we're going to be looking at this Friday's butterfly, 160, 170, 180 butterfly right now. That's going to probably give you a profit, profit area between 164 and 176. So as long as it closes in that, it's a $6 range, as long as it closes somewhere in there, you're going to be looking pretty good. And healthcare, last week we were long IDV. This one turned out for us decently. That was up 5.4%. So if you're in that trade, you got a little bit of a gain right there. This week we're looking at Eli Lilly, LLY. And you can see right now we're at a nice high base. This has been doing really good. And this is one of the reasons that healthcare is looking the best. You take a look at these charts, and they haven't cared. Healthcare hasn't cared what the rest of the market has done, especially in some of these industry groups. So what I'm going to be looking at, I'm probably going to pull this one, go to July 22nd, that 330-340 bull call spread right there. Just a very defined entry trade, $10 spread. You can get into, if you can get into it for less than $4, I think you're looking pretty good right there. This is strong. It wants to go up. You give yourself 2 weeks to do it. I think it's definitely got the legs to do it. Lilly's looking pretty good right now.
Now, the industrial sector, Darren, you had a -1. I completely agree that it is one of the weaker sectors. Last week, we had a Paychex sideways trade, and that one came in very nicely. It was virtually unchanged for the week. It went up 0.03%. So that's definitely what we like to see on our sideways picks. This week, we've got FedEx, and we are still looking at some sideways action here. Now, when you take a look at the FedEx chart, you can see that it is actually a little bit more bullish than bearish. We've got rising moving averages, so everything's working a little bit higher, but you can see there's just not a lot of upside here. So we are sitting right here at 230. So the big question is, okay, how do we want to play this? How do we want to play this with the butterfly? Now, you could do a true butterfly, which is just the 220, 230, 240. It's just a true butterfly, and you want it to go nowhere. But we could always do targeted butterflies, and you could say, you know what, I'm more interested in doing the 225, 235, 245. So all you're doing is basically picking that target, where you think it's going to go to. Now, if I thought that the market was going to be stronger this week, I would then do the 235 targeted butterfly. But the fact that I think the market's not going to go anywhere this week, I want to play it more sideways. So I'm definitely looking at the 220, 230, 240 and just do it for a week and then see what you get at the end of it. In the financial sector last week, we had Digital World Acquisition Corp as a short, and it refused to go down. It didn't go up, but it refused to go down. It was up 1.3% on the week. I know I've got another week on that trade, so we'll have to see what happens with that one. The Carlyle Group, CG, take a look at this one. This one is beat down. It is weak. It is continually just being sold off. And here we are just sitting down here, really a low base descending triangle. The big question you have is, okay, when is it going to break? And the answer is nobody knows. Right now it's sitting at 32. This is when I love to do diagonal call and diagonal put spreads. Basically, I'm saying if I get in on Monday, I've got a buy the 35 of August, sell the at the money $32 put. If it tanks this week, I'm going to make a little bit of money. I'll make a little bit of money down here. If it doesn't tank this week, I'm going to make a lot of money. It's going to be a really nice trade. And what I get to do is on Friday, I get to decide, okay, do I want to keep this August 1935 put? Do I want to stay in this position because I think it looks weak and break down? Or do I just want to take my profit and go? That's what I love about these trades. They give you a lot of flexibility. You can get in for 5 days, and then 5 days later, you get to look at it again and say, okay, what do I want to do here? That is Carlyle Group for the short.
Last week in consumer, we were long YUMC. That's a Chinese company right there. That didn't work out too well. That was down 4.5%. And then we've got a couple more weeks on that trade. We'll see how that goes. That's why we size things for max loss. This week, we're looking at Campbell's Soup. Consumer staple. I mean, you can't get more of a staple than Campbell's Soup. I don't know how much of that stuff I ate growing up, but it's in a, kind of a nice high base right here with some decent upside to it. We're sitting there about 40, 49 right there. So this is another one that looks really good. Go long that August 46, and then this next Friday, short that 49. The same situation to the other side. If it stays right here at that 49 level, then we're going to pull in all that premium that we got. And that's the great thing about selling things that are at the money. There's so much gamma in there with a high theta decay that you can pull in a lot of premium selling stuff right at the money like that. So that's why we like doing things like this. But if it shoots up, well, we'll make a little bit. But I think this one looks like it's going to be sticking around for the next week. So I definitely like this 46.49 diagonal. And technology, last week we were long IBM, and that really went nowhere. It was down 0.46% right now. So we've got a couple more weeks on that trade. We'll see where it goes. Right now we're looking at Bumble, BMBL, and nice high base right there. You can see we had resistance up there at that 34 level, and we're above it right now. I mean, we broke out on Thursday, didn't really have a confirmation on Friday, but if this can confirm on Monday, this is definitely one that I want to look at. I would wait for confirmation on it though. But here's another one, diagonal call spread. Go long that August 30 and short next Friday's 35 right there, and that looks to be pretty good.
As Darren said earlier, the materials sector is the weakest sector right now. It's at a -2. It is looking really ugly out there. And there's a couple things that are just looking atrocious. And last week we identified that the gold sector, gold and silver, looks really bad here. So we had Newmont Mining as a short. It went down quite nicely, -3% on an up week. That's exactly what we like to see on our shorts and basket trading. Since we like the trade still, we're going to just keep ringing this register until it proves us wrong. Here is Barrick Gold, ticker symbol GOLD. Now, this one is, some of these times these trades are tough. And it's the same thing on the upside when you have a real runner and you say, okay, where's my entry point? And you want to be patient and you want to get into it. Sometimes you just get into stuff. And I know that it's not reactionary. I'm not saying just get in because you feel like it. What I'm saying is pick a strategy where your timing doesn't have to be great. Because if you're waiting for like the perfect timing and you're saying, okay, I want to get in it and then out of it and 2 days later, you need perfect timing. But the great thing about options trading is that you don't have to have perfect timing. You just can just get in a position and give yourself enough time and you'll be right. So I'm looking at this and saying, look, I don't know where the entry point is on this one. We easily could bounce up and back up into the low 18s, but why don't I just do a trade where I give myself some time? And this is it right here. You're going out August 19th, 20 puts, and you're selling the 17 of this week. And then at Friday, you get to reevaluate. Okay, what do I want to do? Do I want to sell the next week's 17 call again and just keep bringing in some premium? Or do I want to turn it into a vertical spread of some sort? Lots of flexibility on these diagonal call and diagonal put spreads. So we do like the gold and silver sector as the short inside the materials sector. And look, at energy, I'm with you, Darren. Energy has broken down. We have probably seen the peak of the energy cycle. That doesn't mean we fall apart. $100 oil is still extremely profitable for these companies. So last week we had Suncor as a sideways trade, and Suncor actually moved 8% lower. We put a pretty wide butterfly on this. This stock is very volatile. So we put about a 20% butterfly on it. So it's still within our profit window. It's touching the edge of profitability and loss. We still have one more week on it. We'll see what happens. This week, we're really staying with the same theme on energy here, is sideways. So this is Cheniere Energy, ticker symbol LNG. This is the largest natural gas producer and exporter in the world. And natural gas got all the way up to about $9, and it has popped and cracked all the way down to about $5. Now look, natural gas was selling for $2 a year ago. So it's a really profitable for them here, but they're definitely not at peak profits like they were when it was $9. I assume this one's going to just drift lower. You can see it's been hanging out at this 125, 130, 135 area for a while. And I think we're just going to kind of keep in this downward little channel here. So it's mostly sideways with a bearish bias to it. So you can absolutely play that with targeted butterflies. So if you want to do a little shorter term, I'm liking this one here, just a 1 week trade, a 120, 125, 130. So I just need this thing to drift down $2 or $3 next week, and it's going to be a very profitable trade. If you want to be a little bit more bearish, I'd say give yourself one more week of time, and you go down here to the 110, 120, 130. I think that's going to be a more bearish trade. It's definitely going to pay off if it gets down to that 120. But I'm looking to just to play this one for a week. So let's go ahead and wrap this up. The markets have drifted up to resistance. There's really serious resistance here. And I don't know which way it's going to go. I think it's a coin toss. I think at this point, the most likely thing to happen is it goes nowhere. And I think it's going to be very frustrating to anyone who's playing very directionally. Our traders, we don't want you to be very directional right now. We want you to be more non-directional. We think that is the better place to be. We have falling volatility. We have summer trading. We all the things that we talk about. You want to be more neutral. You want to be more options selling, more theta decay. That's where we want you to be here in this market environment. Look, when it starts trending again, we'll get more directional and put on some delta. But until then, we want you to be more non-directional here. So watch your portfolio mix. Make sure you're not too far out over your skis, long or short, and let's stay more in the neutral area. That's it for us. Thank you so much for joining us. Take care and have a great weekend. Goodbye.
Good trade, everyone.